Welcome everybody. Welcome to session number 3 on the effect of policies on wage gap. We have only a presenter in this session. This is Almudena Sevilla from the UCL, and she's going to present a paper entitled Pay Transparency Initiative and Gender Pay Gap, and show us an evidence for the UK universities. As with the previous papers, Almudena will have 20 minutes for the presentation. That will be followed by a 10-minute discussion by Trevor Logan from Ohio State University, and then 10 more minutes for general discussion. Almudena, the floor is yours.
Thank you very much, Anna, and thank you very much to the organizers for having me here today presenting this paper. It's been a really interesting conference, and it's almost 9 p.m. here in London, so I hope I can still concentrate. Anyway, so this paper is joint work with a former PhD student who's now working in policy at the government in the UK. Danulla Gamage, and two colleagues from Queen Mary University, where I used to work, Shushanta Malik and George Cavestus. Okay, next slide, sorry, I forgot about that. So just to give you a brief overview, so what we do in this paper, we examine the impact of a pay transparency initiative on the gender pay gap in research-intensive universities in the UK. We show that this kind of information shock as a result of this pay transparency initiative significantly reduced the gender pay gap in UK research-intensive universities, and we explore the potential channels. We explore two channels, whether it is a bargaining effect, so women bargaining for higher salaries and promotion, or whether it is a reputational effect, whereby universities fear this reputation being, after the information shock being released, whether universities react to avoid reputational damage. Next slide, please. Next slide. Okay. So just to give you a little bit of background for this paper, there's been quite a lot of progress in general in the economy in terms of female labor force participation and educational attainment, but the gender gap remains persistent. So depending what you, whether you control for characteristics or not, it ranges between 20%, 5%, depending on the industry, etc. In the higher education sector, in particular in the UK, is not different from the economy. We have some work with Sarah Smith, who was one of the previous presenters, using this same data, where we uncover pay gaps among professors of around 5%, 10% in some instances. So next slide, please. Okay, so in previous conferences, we've discussed some of the policies that, particularly in academia, seem to have had some success. The mentoring programs by the AA CSWEP team has proven to be quite successful. Positive action programs in the UK, the Athena Swan program, I will be talking a little bit more about that. This is something that we also analyzed in a paper with Danulla. In the US as well, the gender neutral clock stopping policies and several others. So here, please next slide. Here we're going to focus on a fairly recent, or at least in terms of policies, fairly recent initiative that is gaining popularity, and this is the pay transparency policies and regulations. So governments have been introducing pay transparency in the last 5 years at great speed. The UK passed a law in 2017, Danish government, Austrian pay transparency law. Since we started with this paper, Spain has also passed a law, and Italy, different countries with different conditions on the different laws. But they're all aiming to uncover the gender gaps in the economy in a more transparent way. So why pay transparency? What is the rationale? So this is data from the Fawcett Society, which is a non-government organization in the UK, whereby in a survey they did in 2018, they found out that about 53% of women and 47% of men at work are reluctant to share information about how much they earn with other colleagues. And 31% believe that their contracts prohibit them from talking about their pay. Okay, so transparency is an issue. Next slide, please. So from an economics perspective, from an economic theory perspective, it doesn't take long to realize that in whatever model of discrimination we may think of, either a Vicarian preference model or a statistical discrimination model, the lack of information, and in particular asymmetric information about pay, can make discrimination discrimination wouldn't go away, even because you basically break down the assumption of perfect markets, right? Perfect competitive markets. So when you make that information available to participants in the market, there may be two main effects that are at play. One is a reputation effect. So firms may experience a reputation cost, and therefore they may act upon that, or a bargaining effect on the side of the employees, whereby knowing women in particular, knowing the wages, the real wages, will ask for either promotion or a pay rise. Next slide, please. So we contribute to the literature that studies this type of pay transparency initiatives. So the previous literature looks at issues of well-being that could be linked to productivity, and a relatively recent literature starts looking at wages, and in particular the wage gender gap, and results are mixed. And I'll comment what we find in light of the literature later on. Can we move a little bit down in the transparencies? So here we're going to assess the causal role of the information asymmetries in this market, exploiting this initiative that published all the salaries of professors or academics in UK universities. We're going to use this quasi-experimental method, and we have administrative data on all the academics in the UK, and in particular in these research-intensive universities. So that gives our results high external validity. And we also have panel data, so we follow individuals over their work years. For the years that we observe them. So that is going to allow us to say something about the mechanisms that are at play. Please, next slide. If you move down until we pass on this table, because I'm not going to talk about this table. This is just to give you an idea of the sort of papers that are out there in the literature. But if you can move down to the next slides. Next, please. Next. All right, so what's the institutional framework in the UK? So the policy that we're going, or the intervention we're going to exploit is what happened in 2007. The time Higher Education, it's a magazine, started to report pay in the UK. For academics. So it includes the nominal pay of male and female full-time academics by university, and it was easily accessible through the Times Higher website. And since it's been published in this data since 2007 onwards. So that is the sort of intervention that we're going to use. And just to give you an idea of what the university setting in the UK is, we're going to focus on Russell Group universities. So it's not identical, but you may want to think of the Ivy Leagues of the UK. So in total, it's 24 universities, and they concentrate most of the research funding or research income across all the UK universities. And they also have high autonomy from the government over how they structure their budget and pay. So these are universities that operate in an international market, labor market. And there's also an interesting feature that will come handy for us when trying to assess what are the mechanisms behind our findings, which is that the pay structure in the UK is different for professors and non-professors. So non-professorial pay obeys a scaling system which is very rigid, whereas the professorial pay is individually negotiated within between the employer and the employee. Non-professorial pay is negotiated by the unions directly with the university, and these scales are set so there is little flexibility for employers to actually raise wages beyond a particular scale for that employee without going through the process of promotion, etc. Okay, next slide, please. So this is just an idea of an example of what the publication was. So you can see the universities in the first column, and then for the different professorial staff, women, men, at the different rankings. Okay, can we move down, please? Okay, so the data that we're going to use is the UK Higher Education Statistical Agency data, which collects information directly from the university. So universities need to report to HISA on certain characteristics of their labor force at the individual level. So we have information about individual wages, their level of education, gender, etc., ethnicity as well. And we're going to select a sample of research-intensive universities or academics working in research-intensive universities that are employed full-time and in permanent contracts. So these are the standard academic career contracts, engaged in teaching and research during the years. So we have this data for 2004 until 2016. This data started to be collected by HISA in 2004, and it's continued until now. So it continues to be collected. So we have quite a few 24 universities, academics in 24 universities, and quite a few observations. So remember, we observed the same individual over time. Even if they change universities, we continue to observe them. Only if they leave the academic sector altogether, we stop to observe these individuals. Next slide, please. So these are just some summary statistics where we can see already some gender gaps emerging. So the first row is quite interesting, I think, because it's fairly rare to have representative data of this sort in wages. So these are the real wage of academics. So the mean annual salary for female academics is about 55, and for male academics it is about 62. So there's already quite a gap in terms of pay between men and women in academia at these top universities. Next slide, please. Yeah, so this is what I had already mentioned. So for the sake of time, let's move on to the next slide. And so this is how the gender pay gap has evolved over this period. So the left-hand side is just the raw data. In the right-hand side, we control for some individual characteristics. And what we see is a striking. So the red line represents the 2007. This is when the Times Higher started to publish these salaries. And we see a drop in the gender pay gap. So we're going to move to next, please, to the regression analysis. Next, please. So here we're going to exploit the temporal variation in pay publication and use diff and diff methodology where we use men as the control group. Because we have individual over time, we're able to control for as well individual fixed level characteristics. So if we move to the main results table, that would be great. So next slide, please. And next slide. Okay, thank you. So we basically present the different models when we control for university fixed effects and time fixed effects and time and university fixed effects interacted. So basically the columns 4 and 5 are preferred to specifications controlling for everything that we can control for. And what we see is that the pay transparency dummy is not significant. So it means that men didn't react to this intervention. However, the pay transparency interacted with the female dummy is positive and significant. So it means that that pay transparency had an effect on the wage gap, and it had an effect through women's wages becoming closer to men's. So the dependent variable is the low wage. So if we go to the next slide, please. So in terms of magnitudes, what we find is that following the pay reporting, the log of the female annual earnings increased on average by 0.62 percentage points. That's about 323 pounds relative to men. And based on an average pre-intervention earnings levels of men and women, these increase translates in a reduction of 4.38% in the gender pay gap. Next, please. Okay, so this is just some robustness check. If we can move down to, yeah, next slide, please. So just to give you a brief overview, I'm conscious of time, in terms of how our estimates compare to the literature. There are now 2 papers that analyze using different methodologies in different periods that analyze the most recent 2017 regulation, pay transparency regulation in the UK. And they find that the gender gap decreases in the economy overall by 2.8 percentage points. So our estimates are lower for the university sector. And although they are, our estimates are a little bit higher for professors, I'll show in a minute. So it seems that the university sector may be more regulated, pre-transparency doesn't have such a big effect. So that's the main takeaway from this slide. If we can move down to the next. We also check whether other policies going on at the same time may have confounded our effects. One of the policies is this positive action accreditation program, the Athena Swan program. However, non-STEM disciplines or departments couldn't apply were not eligible for this accreditation program. So when we run our main models on non-STEM departments, we get the same results. So that gives us confidence that we're really capturing the pay transparency initiative here. Next slide, please. I'm going to skip this. We'll just do the usual event study to rule out pre-trends, but I want to move to the mechanisms, if we can move down a little bit. So we test for the reputational effects by looking at whether universities with a higher pay gap at the beginning were the ones that reduced their pay gaps more when this information intervention came into place. And I don't think I have time to discuss the results, but we don't seem to find.
You have that, 2 minutes, Almudena.
Yeah. So thank you. We don't seem to find that this is the case. So if we can move down to the next slide, please. And so this is the results. I'm not going to comment on that, but we can come back to those in the discussion. So the other mechanism that we explore is whether there is some bargaining effect. So we look at the panel dimension in the data, among other things, and we see whether women are more likely to leave the university or the higher education sector or not, and whether that is a sign that they are actually getting promoted within their universities. Okay. And we also check whether the effect of the pay transparency regulation was different for professors and non-professors. So professors had more ability to bargain. Okay, so just cutting the story short, we do find that female professors reacted more, so they got higher pay increases after 2007, and we don't seem to find that these women are leaving their universities, so it seems to be a bargaining effect within a particular university. So if we can move down to the conclusions, and I'll conclude. I don't have time to talk a little bit. So overall, the intervention led to a fall in the gender pay gap at UK universities. The main channels seem to be driven through bargaining effect of these women within a particular university, and not getting outside offers. And we can interpret these coefficients as a lower bound. We don't know to what extent. There is some evidence in the literature that even when information on wages and salaries are published, it's not always the case that individuals access that information. So if that is the case in our sample, then this is a lower bound of the true effects. Thank you very much. I'll stop here.
Okay. Thank you, Almudena. Trevor, now you have 10 minutes. Thank you.
Thank you, and thank you for inviting me to discuss this paper. I'm going to address this in 3 different ways. First, as an economist, and second, as an academic administrator, and then third, thinking more broadly about what this tells us about gender dynamics. And so first, as an economist, I'm thinking the specification using the sort of sharp treatment of the 2017 announcement, thinking about you wanting a placebo group to do this. And so the current structure of the paper, men are the placebo group because their wages are not affected. But as you're mentioning earlier, I wish there was more information on those who were in collective bargaining agreements that would not have been affected by sort of publishing their wages if those wages were published. So you think about those for whom essentially they have wage transparency by the nature of collective bargaining. So publishing their wages doesn't do anything for someone who's in a collective bargaining group because they've already observed what the wages are. They can go to the collective bargaining agreement and literally see what the wages are going to be. And so publishing those publicly doesn't have any effect, as opposed to these individually bargained contracts would be. So I'm thinking that having that as a control group could be particularly important. I'm wondering too, because one of the great things that you do in the paper that you show in the appendix is the additional or supplementary occupations or compensation that faculty receive, which occurs here, could be another driver of gender gaps or could be maldistributed. And that in and of itself could have changed in addition to your primary specification. So thinking not only about the main jobs that academics are doing, but do we see differential access to these additional work assignments that are compensated, as opposed to this much larger discussion that we've had in the academy about uncompensated labor that is disproportionately performed by women. So you might see women moving into different roles or having the additional roles as a function of the transparency to say, why is he receiving, you know, so many pounds a year and I'm doing sort of something similar, and that might be a really interesting effect. I think, secondly, going to the welfare effects, recently, Syracuse University had addressed its equity issues in terms of gender disparities in compensation. And then they were subjected to a class action lawsuit that they recently settled, which will also now pay for, you know, addressing equity issues is forward-looking, and yet you've underpaid people for several years. And so you need to address the sort of, that's the welfare calculation of how have these people been collectively underpaid for a period of time. The same thing has occurred in the bargaining or the gentleman's agreement between Duke University and the University of North Carolina, Chapel Hill to not compete for each other's faculty has now also been settled in litigation. And so thinking about that as a framework for larger scale welfare calculations of how much is lost in terms of wages aggregate due to this sort of disparate treatment by gender will be particularly important. I think one of the things that I was interested in when you have this in cost centers is that you mentioned that you have an underestimate, and I'm thinking about pre-treatments that could underestimate the effects that you might want to control for if you possibly could. So in some work that my colleague Bruce Weinberg here is doing in the United States context, he finds that the implementation or the start of a female dean's tenure results in a closure of the gender gap. And so if we knew something about administrative tenure, that also itself might be related to the gender presence in fields and gender gaps in fields, that might also have been something that would actually anticipate some of these effects. And so he has great work on that. But that can be related to the share of women in a particular discipline, who then would comprise the range of academic leaders. But thinking about how that might set priorities for academic administration would be incredibly important. And I think there's something that could be said about misallocation of talent here if we're thinking about the changes. If people are relatively undercompensated, I know the results here don't speak about women leaving their current positions subject to the publication of the results, but if we could still think about applications of occupational duties within a particular job that could still be misallocated because of differences in pay. Another question I had was about, which is a bit more detailed, is that it appears that in the paper you talk about universities knowing that the announcement is coming, but not knowing that the data would be published. And so were there ever any anticipation effects, or were they shocked by the publication, but they knew that the policy would be instituted? And was that the reason for their inactivity in terms of trying to address some of these gaps? And then I think there's another issue about the returns to tenure differing by gender. And that's another way of framing these results, particularly because it is the women who are in the full professor ranks who appear to be undercompensated. And those women have been, by definition, have been in the profession much longer. And so there are differences in the return to seniority by gender that I think are particularly important. I wanted, just the historian in me wanted more institutional detail about the wage setting process. I know it's individually determined and bargained, But in the American context, you're not really bargaining with your, say, your chair or your dean. You're really bargaining with the provost or some other higher level administrator in the end who controls the resources at the institution. And so I know that these institutions have a lot of fiscal independence, but it was still unclear of how that bargaining process worked. And is it an agreement where some of these institutions could have departments or units that have their own budgets that are allocated from the central administration that they control as they will, or others could have a much more centralized process that requires addressing pay issues in any area to be signed off by senior administrators. And that would be another sort of institutional detail I wanted to know more about. And so some of the larger issues I'm thinking about are sort of, when do the pay gaps begin? You know, you have this great detail about these people essentially over the life course of their time in the professorate. And so you could think about, in a related project, just mapping out cohorts and looking at, is there a pay gap, you know, conditional on the cost center that you're using? Is there a pay gap at the time of entry into the professorate? And then when do these sort of gaps emerge? There's some new recent literature really showing that some of it is centered around after tenure decisions, some of this is centered around other sort of salient times that occur and that have differential effects by gender. And you could do that cohort analysis with this data. Getting back to this question of sort of returns to tenure and investment, doing this analysis, I think, by cost center will be particularly important. And the reason why is, I think for your interpretation of the bargaining result, I'm less convinced by, because I don't think bargaining occurs at the university level as much as it would occur at the disciplinary level across universities. So I know my rank and I'm discovering a cohort of people. I can think about people at my own institution. But in the data that you have, I can start thinking about people at other institutions and their productivity. And I can use that to think about my market wage in a broader sense. And so there could be a way in which you can think about the cost center parts of this, which are really disciplinary sort of focus, and think about that as where the bargaining is actually occurring. Because I don't think it's just the university issue. I think it's going to be disciplinary as well. And I don't know exactly the econometric specification that would get you there, but that would be one of the things I'd be interested in. Another implication I'm thinking about this are there spillovers when this occurs to other related areas? You know, does learning about the pay structure at another university, which you might have not known anything about at all, encourage faculty movement more generally? And does it actually encourage those who are saying we are really, really underranked relative to our peers to move up in the pay scales more generally? Now, that might impact women more because they are facing a larger disparity than men, but do we see sort of movement at universities overall? And you mentioned that that wasn't as large of an effect here at the university level, but I would have to think there are universities that are just not paying their faculty on average the way that other universities are, and that would be a signal, a different sort of reputational signal than what you're talking about in the paper, but one that I think will be very important for universities to solve as they attempt to recruit faculty into their ranks. So I think the larger issues.
Can you start wrapping up?
Oh, yes.
Can you start wrapping up? Yeah.
Yes. The larger issue I think that this is talking about is allocation and misallocation, but also about tenure in professions and returns to tenure. And so I think adopting that framework for the paper will be incredibly important, and I think informative for policymakers in thinking about higher ed.
Okay, thank you very much. We open now the general discussion. If you have a question, raise your virtual hand and I will call your name, so you will be able to unmute and talk. I have here several hands. Rene Adams.
Not a hand, it was applause for earlier.
Oh, sorry. So the other one has also disappeared. So far there are not questions, so let me ask you one question. It's I am really impressed by this finding that the universities with the larger gap do not react differently to universities with the smaller gap, what you call the reputation effect, which actually goes against this idea that employers doesn't like to be seen as unfair employers, because then will be harder for them to recruit. Some productive workers will leave, and so on, you don't see workers leaving. So this seems to be a very particular market. But I was wondering whether you have any evidence or the chance to get any evidence on whether those universities with larger gap, those more unfair employers, have problems to recruit in the market, in particular to recruit women. Do you have any information on, or any idea?
These are universities where women, if I remember correctly, women are not as represented as in other universities. So the earlier wage gap is also linked to lower representation of women. I mean, the good thing about the admin data is that we have lots of observations, but the information about each of the individuals is limited. So we don't know. I don't think we could infer from the data whether these universities face higher difficulties in hiring these women, although we could look at whether the share.
The ratio. Exactly, looking at the ratio over time, whether there is a polarization.
Yes.
No, but probably the number of women is relatively low in any case, right?
It is. Yeah, so we have about 15% of professors, 20% of professors, I think. It's higher at the lower ranks of the distribution.
Okay,
Yeah.
very good.
But this is
so. Very good. Julia, do you have a question, Julia?
Yeah, thank you. Really interesting paper. Thank you very much. Yes, my question was sort of a bit related, or at least following on, and it was around the total number of women in the sample and how that changes over time. I mean, obviously there's lots of other factors driving that other than pay. So, I wouldn't expect any causation necessarily, but you could see it going both ways, I guess. More women, if the pay gap reduces, more women being attracted to the universities, but also on the other hand, women becoming more expensive for the universities. So just interested if there's a trend there at all, or if it just stays quite similar. Thanks.
Yeah, so there is a trend of the representation of women increasing over this period. But you are right, we haven't really explored these exactly, so women becoming more, so I guess, yeah, women have become more expensive relative to men because they are able to bargain better now that they know the wages. And I guess that creates two effects, right? So that the universities may not want to hire higher paid women. So yeah, I guess we could look at how all these ratios of men to women have evolved over time as another sort of outcome of this paper, to try to disentangle what's going on in terms of how universities react to this higher relative wage of women. Definitely.
And next question, Iknur Tser.
Yes, hi, thank you very much. Well, actually, this is not like, but first about this Julia's point, did I get it incorrectly at the presentation? You were saying that this difference, economically speaking, is at £300, right? The change. Yes. So do you think like that £300 is really economically that meaningful to make the universities not to hire a female employee compared to male? I don't know. This is totally like, I was just, when she put it out, I was just thinking out loud, but maybe I don't know, but actually somewhat related to what she was thinking, I was not really considering this ratio of female male or male to female as a dependent variable just to see, but like somewhat as a control, or maybe I'm thinking it wrongly, but what I was thinking is that different departments have different, I'm talking not about the university, but within a university, different departments have different wages. And although at some point you said that for non-professors, it was like giving like a collective collective bargaining. But for instance, I know for LSE that like finance people are earning significantly higher than people in statistics. So I was thinking maybe the gap that you are finding is somewhat could be attributed to the ratio of people working in such departments, right? So if, for instance, people working for finance, I mean, the female working for finance are increasing compared to the people like working in statistics, then this gap as well, like coming through, like narrowing, possibly because of that as well. I mean, this could just bring another dimension. I really enjoyed your paper, and I think it is super well executed. This is not like saying that, oh, what you are saying is incorrect. It's just like, I found it super interesting to include such a dimension on that one. Like we see it a lot in the US as well, like different departments, business schools and so forth, having like a huge differences on the salaries compared to the others. Just something to broad on that. Thank you very much.
I think it's really important, and it resonates with some of Trevor's comments that I haven't had time to discuss, but I'll email you later because they were really good. And I think it's key. I think I don't know whether actually, I can't remember whether we control in the results that I've shown, but certainly at some point we work at least controlling for the cost center, so that's the closest that we have to the discipline, but certainly more needs to be done in terms of these interactions, with this pay transparency, and again, the discipline may be the right comparison group as opposed to the university in a sense. So definitely, thank you. Yeah,
thanks.
Very important.
Okay. I wanted to offer you a minute to answer to Trevon, but you just mentioned your email. He actually was very dense and very, I guess, very useful for you, his discussion.
Yes.
Yeah, and I want to say thank you to everyone.